Hey everyone, I am bringing back a returning guest, someone you love to hear from. So let's welcome Bryan LEBO back to the show. How you doing, man?
Good. How are you guys?
I'm doing very well. Hey, so do us a favor. Let's hit this right up front. You have a channel that is must watch for anybody interested in the Vegas real estate market. Can you tell it what it is, what it's all about? And yeah.
Yeah, I've had a channel on YouTube for going well over a decade. It's the Lebo Group. So just look up YouTube Lebo Group. Every month, I always do a monthly update video. So I break down all the analytics that pertains to the market. But the problem is a lot of times you read analytics and the numbers may tell one story, but there's always underlying truth to it. So I don't just cover the analytics and say, okay, well, sales were down. There you go. I also try to explain because a lot of times, and we'll discuss this later,
Yeah.
as far as sales last month. And then last month when we did a video, I said, look, these numbers don't really indicate the damage that coronavirus did. Yeah, sales were down, but you also have to remember that these sales contracts went into contract prior to coronavirus. So when you watch my videos, you also get a lot more in-depth information as to why these numbers look the way they do. And does this really mean anything? Or is this just a number? Sometimes the numbers are just numbers and they're not truly indicative. Sometimes there's a tremendous amount of momentum and truth to it. So I do that. And then anytime that there's some kind of movement or change within the industry, I tend to do like a special news segment where I explain why this is worthy of its own video and what implications it may have on the market.
Yeah, so I know you are currently putting together this month's, which would be the May summaries data. Again, must watch. I'm a subscriber. I get the notice when that comes out. Have you started pulling the data? Do you have just a taste of what might be in it, or is it just too early?
Yeah, no. I pulled the data. We've spoken a little bit about it, but yeah, I pulled the data for last month, and again, like I just alluded to, this is the first data that we've been able to receive that actually tells us just how impactful COVID-19 was on our market,
Mm-hmm.
because properties that close in May went into contract mostly in April and a little bit in the second half of May, right? 30
Yeah.
to 45-day closings.
Mm-hmm.
So this tells us exactly what happened during coronavirus. So if you want, I mean, I'll share a few of the
Yeah,
statistics right
whatever you're
now
comfortable doing. Yeah.
to do it. And one of the really interesting things.
There you are. You're
Sorry.
back. We lost you for about 10 seconds, Bryan. Lost you again. Oh, you're back.
Got me there. Okay, so what I was gonna say was one of the interesting metrics that I'm gonna start moving forward with is I'm gonna start paying attention to movement by price range.
Yeah,
So that's one
I
thing I
saw
talked
that.
to you about. That's what I'm really interested in, to see how market segments perform, especially with all of these jumbo loans
Yes.
having issues now being available. What impact is that going to have moving forward on the market? I wish I had done this for years, but we'll see how it goes moving forward.
Yeah.
So yeah, so let me share a couple of numbers right now. One of the main issues has to do with inventory.
Yep.
So from a national standpoint, we've all seen that inventory levels are just plummeted. They're just, you know, anytime you have a diminished supply and a consistent demand, prices go up. So that's why everyone going into the year, including myself, we're predicting huge price increases because the supply was low, demand was high. And coming out of coronavirus, that's still an actual metric for the rest of the United States. It seems that there is a shortage of inventory.
Mm-hmm.
On the other hand, in Las Vegas, we're bucking the trend.
Yeah.
We are up since March 11th, we're up 40.96, so 41% inventory. So, I mean, that's pretty substantial. We were very, very, very low. But when you look at it, the first week it kind of jumped, then it skyrocketed the second week. And then we had modest gains.
Mm-hmm.
And then the last few weeks, it's been a plateau and even starting to recede the last 2
Interesting.
weeks.
Okay.
So we'll see where we go from here. But, what I'm seeing in the market is Vegas is on fire right now. People are coming out as if nothing ever happened. So again, don't get too excited with everything going on. Don't get too excited. I've maintained that once we come out of COVID, we would see a bump in the market, because you got to remember, there are people that regardless want to buy
Yeah.
and are comfortable, couldn't. So it is natural. And a lot of predictions that were made in early March said, we would have a 2-month quarantine, 1 month off, and then maybe go back into quarantine. So it kind of makes a little bit of sense. The Imperial College of London actually had that report. But it kind of makes sense that we're seeing this bump in the economy because people are just so tired of being
Yeah.
quarantined. The question we have is, our market's on fire. It appears most markets are on fire. Is this going to last? That's the question we all have to wonder, is this a momentary bump, or is this just an upward trend?
Yeah. So real quick question, Bryan, just to make sure we speak the same language when we say it's on fire. So listings are coming down, which again, you were an unusual market in that Vegas spiked, right?
Mm-hmm.
Does on fire mean you're seeing more stuff go pending in the last couple of weeks? Is that what you mean by on fire?
Right before we got on this call, I was talking to a friend of mine, and we were discussing a property that he's looking at. And this property came on the market. It's a nice property, but it's not like a unicorn. But it's priced $100,000 more than the exact same model that's currently on the market. It's a huge premium.
Yeah.
There's already 2 offers on the property. It's been on the market 1 day. Wow. The other property that was $100,000 cheaper, I just noticed this morning, went into contract. Whereas, like, even in a normal market, some of these wouldn't be moving so quickly. So very, very interesting. I'm seeing multiple offers on property. I'm seeing properties listed and gone in a day. So considering some of these price ranges, literally this week alone, I've seen a ton of jumbo loan type properties just vanish, where I'm like, wow, I thought these would be sitting a lot longer.
Well, so this is really interesting, and I'm going to love to get the June confirmation of May. Because if Vegas comes out of this like it never missed a beat, which is I'm hearing you say is possible, right? It maybe not probable, but certainly possible.
It's certainly possible.
Yeah, the rest of the country is just going to go freaking screaming higher, because what the rest of the country doesn't have is the inventory, right? You had that a little spike in inventory, so your absorption is going to be a little slower. But I mean, you sent me a chart. Let's talk about this now. You sent me a chart, which will actually be the thumbnail for this video, talking about 2020 inventory nationally compared to 17, 18, and 19. And that was eye-opening. I've never seen that chart. And it just screams lack of supply.
Yeah, and hopefully we'll find a way to get you guys that chart. It was actually in the Wall Street Journal, so maybe we can do a link to like a Dropbox so they can download it. But yeah, I mean, when you look at the chart, I mean, you can see, here's 19, here's 18, here's 17, and then 20 is all the way down here. And when you see it visually, you go, wow, okay, it does stand to reason why prices would increase because of such a low supply. And now look at this. Our inventory, like I said, has gone up 41% since March 11th, which is substantial by any measure. On the other hand, it puts us at about 6,000 properties, homes, single-family residences. That is only a 2-month supply. We normally sell about 2,000 homes this time of year. So let's just say that we resume as if nothing ever happened, which it kind of feels like this week. I mean, this week alone feels like nothing ever happened. So let's just say that June goes like a normal June. We only have a 2-month supply of inventory. A balanced market is always presumed to be a 6-month supply of inventory. So even though we increase 40%, we probably are mirroring the rest of the country as far as the low inventory level. So if everyone's attitude is, hey, everything's great, and all these articles are saying, hey, everything's great. They're on Today's Show this morning. There was a segment where all these mortgage lending companies are just trying to hire people because they're inundated with refinances, et cetera. So it's really going to be interesting. I mean, I'm sure you guys saw mortgage interest rates raised like 27 basis points. Because the bonds, when the economy looks good, people think that the interest rate that is discussed in the media, and when the Fed lowers rates, people think that that dictates your mortgage. Like, oh, the Fed lowered rates a quarter point, my mortgage is going to go down a quarter point. yes and no. Ultimately, it will, but in the short term, no. That's the rate at which banks get to borrow from.
Yeah.
Mortgages are tied to the 10-year Treasury. So this week, the 10-year Treasury just exploded because of the jobs report. As a result, mortgage rates have actually increased a little bit.
Yeah.
So again, there's so much going on right now, but I also believe in tempering your
Yeah.
emotion. This
Yeah.
could be an overreaction, or this could just be life as normal. It could be.
Yeah. What we're seeing now is as more and more states open up, and California opens up today, actually. Gyms are opening up next week. So most of the populous states are coming back, which means I really think June employment data could be surprisingly strong, right? We were shocked yesterday when it was
Right.
2.5 plus million on an expectation of -8. I mean, they're talking now about 8 to 10 million jobs coming back in June.
Right.
You know, it's amazing to see what the Fed and Treasury have done. And just maybe we're going to get through this. Man, it just feels weird, though. It just feels weird to say.
We'll see, you know, and the other thing is that we won't know for a while is, so like last night, we tried to go to 2 restaurants for dinner and meet up with some friends. Both restaurants basically just said, hey,
Don't
just
bother.
not here. Just don't bother. Don't even show up and try to ask. We are completely booked. So on one hand, that's a great sign. On the other hand, 30% capacity is
Yeah.
not exactly something to brag. I mean, in a normal world, if they can only pack in 30-40% on a Friday night, you're going to struggle. So while things do look really great, we also have to remember that we're also not operating at full capacity. The other issue is, like we discussed a little bit before the show, part of the jobs report, we find out that 50 million jobs were created because of the PPP program.
Mm-hmm.
Now, the question is, will these businesses actually be profitable? It's one thing
Yeah.
to stay, you know, you can stay in business,
Yeah.
but are you profitable?
Yeah. You bought
So,
time. Yeah. Yeah.
yeah, you bought time and you got all these employees back, but is demand going to be there?
Yeah.
Do you need all these employees? And when the PPP program ends, are these employers going to lay people off, or are they going to go, wow, we exhausted our funds, that's what was keeping us going?
Yeah.
So again, just because things have the look of recovery doesn't necessarily mean that everything is great underneath it all. That's where I'm still very skeptical, and it's only been a week. I want to see how we end June. Are people still out in mass at the end of June, or do people blow money for a couple weeks and go, oh, wow, oh, I need to dial that back a little bit? So we'll see.
Yeah.
You know, but when we're talking about the numbers, I pulled the numbers for last month, and yeah, it was exactly, I think I came on the show last time and said we'll probably see a 50% reduction, and it was literally 49.5%. Our sales dropped 49.5.
Mm.
To me, it doesn't mean anything. That's, I mean, what did you expect to
Yeah.
happen during coronavirus? So yeah, we dropped 50%. The kicker, the kicker, the median price went up.
Go
So
figure.
sometimes I mean, logic just sometimes does not dictate. Yeah, I think, well, let me see. Our median price went up 1.7% to $314,500. We maxed out at 315.5 in March when we were like just trending up like crazy.
Wow.
So the question you have to ask is, I mean, in any normal world, when you lose 50% of sales, prices plummet as well.
Yeah.
So the question you have to ask yourself is, how did prices go up when sales went down? And what I'm guessing is that, because you got to remember, anyone who was furloughed, lost their job, you can't get a mortgage. You can't.
You're not
And
closing.
then,
Yeah.
right. And if you think about in general, who is the most likely to get furloughed and laid off? It typically is a higher propensity to be lower end employees.
Yeah.
So if you look at the fact that lower end employees were disenfranchised, if you will, and furloughed and laid off, that meant a lot of very low end housing didn't get to close
Mm-hmm.
because these people couldn't obtain financing due to job loss. So when you're looking at median versus average, it's a different metric, right?
Yeah.
So if you lose a lot on the low end, then it just shifts that median up higher. So to me, the fact that the median price went up, yeah, I guarantee you I'm going to see a headline here in the next week. Vegas explodes as median home prices rise. And to me, that's kind of a bullshit headline.
Yeah.
Let's temper that one. Another headline is Vegas plummets as sales drop 50%. Right. So which headline do you
Which one do you want? Yeah.
Which one do you want to run? So again, like I said, these are the numbers. I don't think that these numbers necessarily mean diddly squat. Let's see how things play out over the next few months. And I still maintain that there's underlying problems here in the economy. So I still think, I don't care what happens for the next few months. Let's see how we end the year after the PPP program ends with unemployment and these mortgage forbearances.
Yeah. Statistics, right? I'm a numbers guy. I've been playing with numbers my whole life, have an accounting, MBA, econ degree, all that stuff, right? So numbers are my sweet spot. This is what I think is going to happen, right? So again, let's just use 100 as the number, right? So Vegas sold 100 houses in, April. Then it sells 50 houses in May. Then you sell 75 in June, right? People are going to come out and say, oh, look, transactions up 50%. And you got to watch percentages. They are very, very tricky sometimes.
Right. So, yeah. Incredibly misleading. Yeah.
Yeah. So I'd be interested. I mean, there's only one way, right? You whack 50% of transactions and the median goes up, which is really funny because just like 10 minutes ago, we're talking about problems with jumbo loans.
Right.
So, so that just means some folks have some cash and they're putting it to work and buying some unicorns and some nice houses, I think.
And I think part of it too is obviously on your high end, you're dealing with more educated, more astute buyers. So, the person buying the $1 million home obviously has done fairly well for themselves, probably has studied. Mm-hmm. So the odds are they're going to look at, an economy that's in peril and go, whoa, now is not the time to do this. Let's just wait and see. I'm having stock market issues, et cetera. So it kind of made sense why that market segment just walked away. Yeah. Whereas the middle end and low end still kind of kept plugging and chugging along. Yeah. Now, I mean, your stocks have rebounded. Everything's flourishing. I mean, by all means, COVID's, hell, we're not even talking about coronavirus now. We're talking about protests. Exactly. No one gives a rat's ass about coronavirus. It literally lost the headline. So at this point, I always say Americans have a very short-term memory, but this is like unprecedented. It's like literally a 1-week memory, and we're worried about the protests, and it's like, hey, let's go spend money. Let's buy $1 million homes. Who cares? It'll be all right. I don't know what to say.
I don't know if you had this data, but I'll ask the question anyway. Do you know how many $1 million properties closed last month? Do you have a feel for that?
No, I can pull the metric. I don't know. What I did pull was I showed you that when I broke down by segment.
Was it 500K? I think it was. I forget what was.
No, let me see real quick. Let me see if I can pull. Let me see if I can pull some of these metrics, because it was interesting when I was able to go through the different price classes by price range. Yeah, let me see if I can pull, because it kind of showed there was a huge disparity, and that disparity is always going to exist to a degree. Mm-hmm. So to give you guys an idea, under $250,000 homes barely exist in Vegas, under $250,000. Yeah. So they do exist, but there's 1,300 homes right now in Las Vegas that are priced under $250,000, and 47% of them are in contract.
Wow.
So you can see the absorption rate at that price rate.
Yep.
Now, when you're talking the majority of homes, the vast majority are 250 to 500,000.
Yeah.
And right now, there's almost 5,800 of them on the market, mm-hmm. and 39% are under contract. So you can see the absorption. But then when you jump up to $1 million to 1.5, mm-hmm. there's only 233 on the market, but only 15% are in contract. And then when you go over 1.5, it's 11. There's actually more homes over 1.5 than from 1 million to 1.5.
Wow.
And it drops. Yeah, there's between 1 million to 1.5, there's 233 homes. But when you jump to 1.5 plus, it almost doubles. It's 364 homes. So, and there's only 11% of those homes under contract. So you can really kind of see a huge difference once you get into the jumbo loan territory.
Yeah.
Things drop off pretty quickly, you know?
Yeah, that's interesting. And I love that you're going to now look at price bands going forward, because I think that will be pretty telling as we go forward, because you'll see different absorption rates and it'll tell you
Right.
where people are getting excited.
Well,
Yeah,
because what I wanted to see is when we first spoke the first time, I went back to 2011 and 2012, and I wanted to see how price segments were operating.
of
And
course.
what was crazy was to find that the major problems were on the low end, and on the high end, it was the middle ground that was
Ah,
actually okay. That was surprising to me. So once again, if let's just say, the worst case scenario does occur, like we've discussed, come January, February 2021, what I want to do is go back and see what's languishing on the market.
yeah,
Are these low end homes, because those are the workforce that's most displaced?
right,
Do we go from 39% absorption to 20%?
right.
That's where I want to see the shifts coming from. What
Absolutely.
happens in a healthy market and what happens in a market where everything has crashed.
That's genius. So I got to ask, man, you nailed it. You nailed May. You said 50% drop. It's on record. You nailed it.
Hmm.
So what, you bold enough to take a guess at what June might be?
I'm going to say June's probably going to be pretty bad as well, because you got to remember we just came out of quarantine.
Mm-hmm.
So again, what closes this month
That's true.
went into contract last month and the month before. And a
Ah,
lot of it's the month before because we were writing due to the COVID-19.
yeah,
There's a lot
yeah,
of finance and appraisal issues. So everyone was writing. I only write 30-day offers. And even I was writing 40-day offers just to be sure.
yeah.
So I don't think we're going to see great numbers this month.
Okay.
I mean, I'd say I'm just spitballing. I really haven't spent enough time, but I'm probably going to say we'll be down probably 40%
Okay.
from normal.
Yeah. So
I
so that's
think
closings.
that's closings. What we want to know is, what are the closings going to look like? Even July is going to be a little affected, but July and especially August. Because again, like I said, this
Yeah,
week, the first week of June has been crazy. So these are going to close sometime in July.
probably. Yeah.
So I want to see in August, I want to see what the July numbers are. Because again, the problem that we run into is our inventory levels have already plateaued and are starting to decline a little bit,
Exactly.
just like they were before.
Exactly.
So if we're selling 2,000 homes a month in a normal world, if we're going to call this a normal world, which it really feels like at the moment,
Yeah.
again, let's see how it
Yeah.
goes the rest of this month. But if this month remains normal and we sell 3,000 homes,
Oof. Yeah.
we need a lot of homes on the market to replenish that inventory.
Yeah.
So we're in June, July, August. By mid-August, we could easily be down to 4,000 homes, 4,500 homes, and
Wow.
we could be right where we started the year.
Yeah.
Again, we kind of have to wait and see.
No, I agree with you. I think that's why, yeah, your experience in doing this is so valuable. I'm curious, what is August? First off, August is hot in Vegas. Everybody knows that. Is August a good month for selling homes, or is it just too damn hot?
Yeah, I mean, here, I'll go back to the sales from last year. So last year, where are we? So June 8th. So last year, we sold about 2,600 homes in June, 2,900 in July, and then 2,900 in August.
Oh, okay. All
So
right.
really, and May was like 3,000. So technically, this is the slowest month last year,
Okay.
but yeah, July and August are huge months for us.
Okay.
You got to remember, just like any place, people are relocating, and
Hmm.
Las Vegas is a huge relocation community. Very few people are from Las Vegas,
True.
so we've always had a lot of people from New York and especially California.
Yeah.
And with everything that's happened in New York and with everything that's happening in California, I mean, there's
Yeah.
no way to gauge, but the net migration could be huge coming from California and New York.
Yeah. I mean, that's a great point. And that could be one of the things that really means Vegas really sees no price deterioration. Maybe you see it at the ultra high end, given those absorption rates we just talked about, 11%
Right.
and 15%. I mean, that's not healthy, right? That's 10 months of supply roughly. So maybe you see some very low, some price deterioration at the ultra high end, but everything else, I think you're right. I think New York, I mean, California, man, you thought you had net migration from California before. I think it's going to double or triple.
And that's the thing. I mean, just this last year or so, there's so much dissident happening in California
Yeah.
that they're literally pushing people out of there.
They are.
And, most of my clients that come from California say, well, we were looking here, we were looking at Arizona. Usually it's, Vegas and Phoenix that kind of really gets that look. And again, Las Vegas being in Nevada, we have no state income tax.
Yep.
So that's pretty large for people. But yeah, I mean, with everything going on, who knows? We might just get even a higher surge of migration from California.
Yeah. Well, first off, I'll say it. You are going to get a higher migration from California, and it probably will be meaningful, 30 to 50% net positive. I'd probably even be prospecting there because, again, we have a $58 billion missing hole in our budget. Taxes are going to go up. Fees are going to go up. It's going to be plus all of our tech companies are saying you can live anywhere. So I've had just in the last month, I've had, I don't know, a dozen people reach out to me via the channel going, would you live in Vegas? I'm like, dude, if I'm single, hell yeah. Right.
Yeah.
So I think it's coming.
And you know what? Like, there's a huge misconception. I mean, it's gotten a little bit better, but I can't tell you when I travel, there's a misconception where people go, oh, you live in Vegas? Do you live in like one of the hotels, the casinos?
Yeah.
And you're like, okay, no, like
that's not everything.
If you live in Orlando, do you live at Disneyland? Do you live like in the alley behind it? No, it doesn't work that way. So people really don't realize once you get away from the Strip, it's suburbia. Yeah. And it's a beautiful suburbia, and what you were saying is it's not just single people. In fact, actually, more times it makes sense for young couples. It makes more sense for families. Because you got to think, I mean, if you're in Southern California or Northern California, if you're in your late 20s and you got a great job and you're making $100,000, that's nothing in San Jose and San Francisco and Oakland, anywhere in Southern California. Amen. $100,000, you're getting by. So you're scratching your head going, I finally got a 6-figure job and I'm broke and I'm not getting anywhere. I can't buy a house.
You're right.
So a lot of people, hey, this wasn't their dream. Their dream was to be in Southern California or whatever. They did the dream and they realized that they were going to be a slave to renting for the rest of their life. You're right. A lot of people come here because, I mean, we're half to a third the price of areas in California. So if you just got married and you want to start a family, you'll never own anything there. Whereas here, you can buy a lovely home and start a family, and you can pivot anywhere you want. So that's a huge selling factor. And then we've always been a huge retirement community because, again, you live in a 1,200 square foot home in San Francisco built in the 60s. Yeah. And you sell it for $3 million that you lived in for 35 years. Yep. And then you come here and you're like, I can get a mansion for $900,000.
Life is good.
So I mean, our migration is very, very strong because we still are very affordable and the quality of life is very, very high. Once you get off the Strip, it's a very normal world,
Yeah. So let's actually, because I get a lot of people that are asking me about moving out of California. So how can people get a hold of you if they want to talk about buying a house?
So easy way is just go to my website, lebogroup.com, LEB as in boy, OGROUP.com. Maybe put a link in the description.
I will do that.
And all my contact information is there. You can email me, Bryan, BRYAN, at lebogroup.com. My number, 257-LEBO. So 702-257-LEBO. Pretty simple. So yeah, just hit me up and I'll be glad. I mean, I appreciate your viewers. I appreciate your channel. I've already spoken to several of your viewers, investors that were looking. Awesome. But yeah, even if you have questions, concerns, issues, by all means, please just text me, email me, call me, and I'll be glad to answer.
And again, the phone number is 702-257-LEBO?
Yep. Okay. 257-LEBO. Yep. Perfect.
I will, and it's 702 is the area code.
702 is the area code in Las Vegas.
Cool. I will put the phone number and your email address as the first 2 lines of this video's description.
Thank you.
Of course.
Thank you.
you give me your time, I got to give you some business. It's only fair,
There you
right?
go. Reciprocity, right?
Of course, of course. So why don't you tell people about your channel one more time? Because again, it's must watch. I look for the videos as they come out.
Sure. Yeah. So on my channel, there's a multitude of things on there. So all of my listings, I do 4K video walkthroughs. I've been doing that for years, way before coronavirus. I mean, you can go back 10 years and see property walkthroughs. So it's really nice, especially if you find a floor plan that you like. You know, I can send you the video. Here's what the floor plan looks like. You can really, check it out. And then we can go find, in Vegas, they build the same house, 20 different areas. So it's pretty generic in that sense. But I have all my property walkthrough videos, but really the meat and bones, the crux of the channel is for information. So if you like the kind of information that you're getting here, subscribe to my channel. Every month, what I do is I break down all the analytics. So the first part is going over the analytics. What were last month's sales like? Where's the median price at? Where are inventory levels? Because our inventory levels will dictate what direction we're going in. Then, depending on what kind of a market we're in, a lot of years I was discussing the notice of defaults.
Yeah.
Because if notice of defaults start increasing, that's a precursor to pending foreclosures.
Mm-hmm.
So the last few years, that's been a joke. So I don't even cover that anymore. But the bottom line is anything that I think is relevant information, like now I'm following these price ranges because I think that is very, very relevant.
Absolutely.
I want to see a trend. So I break down all these analytics, and then at the very end, I kind of give a commentary as far as why these numbers mean something, why these numbers don't mean anything, and where the market is really going. Because I'm on the ground floor. So I know what's going on. I have a pulse. And just like we were saying, I know the market's on fire. There's multiple offers everywhere. But you're not going to find any data to support what I'm telling you. What I'm telling you is future news. So you get the news before it actually hits the news, and then you also get a precursor to where the market is going. So if you're looking to buy, you're looking to sell, or even if you're just teasing the idea of moving to Las Vegas, I've got plenty of people who watch me for 2, 3, 4 years because they were eventually planning on moving to Vegas or retiring to Vegas. Yep. So it's a really good source for information to acclimate you with the market and where it's going.
Very cool. And again, subscribe, hit that little thumbs up, subscribe, leave comments. And if you go watch his channel, leave a quick comment. Let him know you came from one rental at a time. It'd be great to hear from Bryan that we got more and more cross-pollination.
Right on. Thank you so much for your time, guys. I really appreciate it. Thank you for watching.
You got it. All right, Bryan, have a wonderful day and good luck.
All right. Take